Welcome to my first educational video on this YouTube channel. Today I'm going to be talking about Forex basics and give you a really strong foundation in order to become a successful Forex trader. On this channel, I want to cover more advanced topics that will be more valuable for you all. However, I think it's really unfair not to provide a good baseline or roadmap for new traders or struggling traders to always fall back on in case they are not able to achieve the goals that they are looking to get to. So in this video, I'm not going to be talking about all of those really basic ideas that a lot of other YouTube channels tend to talk about when it comes to basic technical analysis, basic fundamental analysis, basic strategies. I'm not going to be talking about that in this video. Today, I'm going to be talking about a good roadmap that you will be able to stay on in order to assure your success within the Forex markets. Obviously, it takes a lot of work. It means that you're going to abide by what I'm talking about in this video today. But I can basically say with relative assurance that if you follow a lot of these tips that I'm going to be talking about in this video and this roadmap, it will greatly increase your chances in becoming profitable in Forex trading. But before I get into the video, one thing that is much easier than becoming profitable in Forex is smashing the like button. So make sure to like and subscribe if you'd like to see more content like this. Also, make sure to join our free Discord group down in the description down below. It's an amazing community of like-minded traders and individuals, and we trade markets every single day, whether it be stock, cryptocurrency, or Forex. So make sure to join that group as well. And even if you have any questions, feel free to message me at any time. But anyways, let's get right into the video. And the first thing I really always like to talk about within my videos are misconceptions. So I like to break down these misconceptions right at the beginning of the video so that you aren't duped into thinking something that is completely incorrect. And the first thing I want to mention is that Forex markets are not easy to trade. This is definitely true. So I love trading. I've traded so many different markets in my life. However, I would say that Forex is definitely one of the more difficult markets to trade. And that's really because there are so many different factors to account for. And it is also one of the most competitive markets in the industry, as it is the most traded in the world. Think of it as if you are playing a sport and you are trying to become a professional player in that sport. Let's say you are trying to become a professional player and there are 100,000 other individuals who are competing against you in order to try to become the top 1% in that sport. That is going to be much more difficult to be good at that sport than another sport that maybe only has 10,000 individuals, competing for that top spot. So you need to think about it that way. There are a lot of people competing in the Forex markets as it's open to the entire world. So it's going to be much more difficult to become profitable and successful in Forex than, say, the stock market. There are definitely differences between both, but I would say as a generalization that Forex is definitely a more difficult market than many other markets due purely to the fact that there's just a lot more competition. But I think one of the most important things to understand about Forex markets is really the yin and yang of trading Forex, and that is fundamental analysis and technical analysis. Forex is one of the markets where you cannot skip out on one of these key pillars to trading in these markets. Forex is based almost entirely on fundamental news and events that occur. So every single Forex market will have different individual factors that will affect it, whether it be that country's specific interest rates, whether it be the Fed within that country doing different things at that certain time. It could also be commodities that affect that country's currency heavily. There are so many different factors for every single individual currency pair that it's very important that before you open a trade on any currency, that you really research what's happening within the currencies that you are going to be trading against. Because one fundamental factor may make your entire trade void. So even if you have some amazing setup with technical analysis and you see, oh my gosh, it's breaking the wedge, it's going on a run, it's breaking a resistance, right? But then that country, let's say, lowers their interest rates, then the currency just crashes and it makes your position completely bad. So just understand that you really need to do your research and have a complete understanding of what factors play into a certain currency's price before you open the trade. Now, as for technical, you might be wondering, well, why am I still talking about technical if I just said that it's not as important? So the thing about technical is that technical analysis is that one extra mile that you can take in order to become more successful in trading. So fundamental analysis will allow you to have a general market view on that currency pair. So you can say, okay, since there's this expectation with a certain currency, then I know that the markets are going to continue to go up. However, then you can look at your technical analysis and say, okay, now I know that I want to trade this market as it's moving up. Then I can look for a good entry, or I can look for a good pattern, or I can look for X and Y in order to open that trade and then assure that it's successful until your exit. So that's really where technical comes in. And as there are different market factors in terms of fundamental analysis for each currency market, I also think it's important to understand that every currency will have different market attributes when it comes to technical analysis as well. Certain currencies are going to be more volatile than others. Certain currencies will make specific moves, whether it be maybe there is one currency that whenever it breaks a resistance level, it tends to move a lot higher, whereas there's another currency that will have a lot more false breakouts. So once I get to this next slide, I think it's really important to keep all of this in mind as it ties heavily into what I'm going to be talking about next. And that is really learning from your losses. So in trading, and I'm just going to say this right from the start, right? In trading, if you do not learn from your losses, you will not become successful. And I know that most people will not listen to this because I was one of those people. I always said to myself, I don't want to get a journal. I'm not going to write down what's happening on every single loss. I can just keep this in my head and I'm going to learn it eventually. However, that's not true, right? What you need to think about trading is an initial investment, right? If you have, let's say, $10,000 within your account initially, those $10,000 are an investment not because you're going to be making money over time, but because it's an investment to teach you how to trade correctly. And if you do not write down or account for the losses that you are making with that money, then you will never end up improving, and that investment will go completely to waste. Every single lost trade is not a bad trade, it's an opportunity to learn. And if you're not keeping track of those bad trades, then you're not learning and you are just wasting your money. And that's why a lot of people tend to lose money because they're not accounting for their bad trades. So that's just what I sort of wanted to mention. You will always make initial losses once you first get into Forex. And that's purely because, once again, you're learning. I think the best way to think of this is think of your mind as an AI. If you just tell a computer to trade cryptocurrencies as an AI, then it's going to lose money. And the only way it's going to change that is if it learns from its losses. And so that's why I highly recommend that you start journaling whenever you're trading. And that basically just means, accounting for what trades are profitable, what trades are unprofitable, and you write down all of the reasons why. And so let me give you just a quick example of what this would look like. So here's just a basic entry that I had in my journal from trading, I think just 2 days ago in the stock market. And so I was saying that I had an Apple short and there was a bearish wedge on the SPY. And generally I was already bearish on the SPY at this point. And I shorted Apple after the SPY broke this wedge downwards. And so this was a profitable trade. However, I had another note saying that I could have waited longer to close this position because I felt that I actually was a little bit too reactive and I closed this position early. So this is a great example where I'm able to see what worked for me. I see that Apple was a company that I'm very good at trading. And, I looked at factors from the SPY as well, which is the S&P 500, and I was able to make a profitable trade. So whenever trading Forex, you need to be doing this as well, as things like this will allow you to see what markets you are profitable in, what strategies are allowing you to make profit, and what factors you're really good at trading. So through journaling all of your trades and seeing what's making you profitable and unprofitable, that will allow you to learn from each and every one of your trades. And then those losses are not just losses on your account, but it's really important, valuable data that you're keeping track of in order to become successful in Forex. So I know I keep repeating this, but this is extremely important. But now let's move on to the next slide, and that is specialization. And this really comes after you have journaled and gotten exposure to the market initially. So I think a big issue that a lot of traders get to as they start to become successful in Forex trading, or as they begin this exploration process within the Forex markets, are really just this overwhelming, ginormous markets, right? There's so many different options to trade in Forex. And I think that initially a lot of people don't realize really that they should specialize, because it can be way too hard to track the entire market and every single currency pair. As I said before, there's so many different factors. So you need to just focus on the pairs that you are trading profitably. So again, go back to your notes, go back to your journal, see what currency pairs you are consistently trading well, and then take those into account and only trade those pairs. Only trade the best setups and only trade the pairs that you are able to trade profitably. Once again, your goal is to maximize your edge in the markets. Your goal is not to try to squeeze every single bit of profit out of the markets, because you're going to spread yourself way too thin. If you're trying to keep track of the euro, the US dollar, the Canadian dollar, the Japanese yen, if you're trying to keep track of 30 different currencies, you're going to have no idea what you're doing, right? You're going to be okay at trading each and every one of those currencies. However, if you're specializing in, let's say, 4 currency pairs, then you will be able to make a much higher volume of trades within those specific pairs, and you will be much more profitable within those specific pairs. And so once you become consistently profitable, then that's when your profits will really start coming in. So really, consistency is key, and specialization and learning from your losses really ties into that and is super important. Trade the major pairs. This is a mistake that every single new trader goes through, and that's when you start researching more new markets and you find these emerging markets, and maybe you think, oh my gosh, there's such a good opportunity to trade this one market. However, then you have huge slippage, you end up losing a lot on that trade, and it's a horrible experience. I had this experience where I opened a very high slippage trade on an emerging market, and I was extremely upset. And then I was like, well, I'm never going to trade any of these emerging markets ever again. I think it's just better for you to focus on major currency pairs that are on this list, that are high volume, high liquidity. And then once you're successful there, then down the line, if you're looking for more diversification or maybe some more profit potential, longer term positions in emerging markets, then you can do that as well. But really just focus on the major pairs. This is a very basic but important one to understand. Finally, time frames. This is also something that's very difficult whenever you get into trading, is really what time frames should I be looking at? I think in Forex, it can be very tempting to trade the super short time frames, whether it be 1 minute, 5 minute, 15 minute. But in reality, I think it's much better generally to trade the longer time frames. If you find, again, this goes back to your journaling. If you find that you're way better at trading 15-minute candles, then by all means, you can go for that. If that's your trading style, if that's your strategy, you can go for that. But I would say generally for most people, a longer term time frame will be much better. And that's purely because, as I said before, there are a lot of people competing in this market, and a lot of that competition is within the very short time frames. And so whenever you're looking at longer term time frames, it gives these other players less of an opportunity to take advantage of your trading. And so that allows you to put you at a more consistent edge in order to become more profitable. So really, as I mentioned before, less is more. Only trade the best setups in order to become consistent. And then emotion, if you trade longer time frames, you will find that you also become less emotional as you are more sure of your trades. If you're going to wait, let's say a month for a certain trade to get into profit or to get to your target, then you are going to be a lot less emotional than if you're having to make decisions within a minute, right? It's really hard to do that. You're going to become more emotional. So generally, I would recommend trade longer time frames. And I know a lot of people think that day trading is this thing where you have to make 20 trades every single minute and you have to be staring at your charts for 5 hours a day. But in reality, it can really just be checking your positions every day for 10 or 15 minutes, making sure everything is good, and then the rest of the day doing something else, right? Keep yourself distracted so that you aren't emotionally affected by your trades. Maybe if you see some major news, then you can go back, close the position because you think it's invalid. However, aside from that, I would say generally try to keep your emotions out of it and find other things to do while your longer term positions are open and potentially are going to make you profit. Finally, practice. This is the last thing in this slideshow, and practicing is key. Once again, this is a skill that you are going to develop over time, and the only way that you're going to do that is by practicing. As I said before, this thing that I related to an AI, right? Your mind is an AI. You are an AI. You learn over time, and over time, that is the only way that you are going to become better. So the more that you practice, the more trades that you open, the smarter you are about the capital that you're starting with by writing everything down. The more you do that, the better you will become. And this is not something that's going to happen overnight. This is going to happen over a year, over a couple months. It's going to happen over a long time frame of time. But really, practice makes perfect. So yeah. Anyways, thank you all so much for watching this video. Hopefully you now have a set path, a set foundation for you to become a successful Forex trader. Anyways, thank you all so much for watching, and see you in the next one.